Hi, thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos are on mortgage rates. We kind of get into what impacts mortgage rates on a daily basis, whether it's something from the economic data, whether it's something from the headline news, or different sentiments that are changing. And sometimes it may look like the good news should be beneficial, but you're seeing a negative result. Sometimes the sentiments just change. That good news is now bad news, and vice versa. So we're kind of here to explain these things for you folks, so that way if you guys, or for example, in the real estate industry, are looking to find out what's going on, we're here to try to help you understand where we're at with things and where mortgage rates are moving, if it's going trending upwards or downwards, or if it's kind of improving a little bit, or just kind of staying the same. If you guys are looking to refinance or purchase, you might be looking at where rates are going and trying to make a decision whether to lock in or not. Hopefully these videos will help you guys out, make you better, help you make a better decision as to which route to go. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you guys out. If you guys got questions, whether if it's something about mortgage rates, if you guys are looking about different programs out there. If you're looking to buy, need to get pre-approval, we can help you with your pre-approval process and help you finance that property. If you're looking to refinance, we can certainly talk to you about different solutions that's out there and run some numbers for you and help you determine what would be the best suitable loan for you folks with your refinance needs. Uh, so please, if any of those are indicators, just please feel free to reach out. We're here to help you guys out again. Uh, Without further ado, we'll start off with the economic data. Today, we don't actually have anything today. So if you look at today's, we don't have anything going on. The rest of the week does have a bit of data out there. The most important one will be on Wednesday, which is the retail sales. We'll get the retail sales coming in Wednesday. But we also got the FOMC meeting starting tomorrow, which is the Fed's two-day meeting that they meet every 6 weeks. They meet tomorrow, and then they get their final rate decision or announcement on Wednesday. So right now, all investors are kind of watching what's going on here, because now there's talk about a new change in their policy, and they want to increase their tapering, uh, and they want to find out by how much. So that's going to be the question: is by how much do they want to increase their tapering? The idea of increasing the tapering is by them increasing it, they can get to start hiking. They don't want to do it together, so they'll finish the tapering and then they'll start the rate hikes. And so this meeting will be important because they'll have what they call the dot plot, which means it's an estimate of where the Fed members think where they'll start raising rates. And this will give investors a better clue as to when they can expect the first rate hike, and so they'll be looking at that as well. That will be very important. So look for the announcements that they're going to come up with, as well as especially the pace of the taper, and then also the dot plot as to how many hikes can we expect and when will they start those rate hikes coming in 2022 here. So those would be the important things what they're looking for. Stocks are down today. They're kind of bracing for this. They're trying to price into what's going to come in, because again, we don't know if they're going to increase it by 50% or if they're going to do it maybe by 100%. So basically double up on there. So again, right now they're like at 10, I think, on mortgage-backed securities, but that could go up to 15, or I'm sorry, I forget what it was. But anyways, so they're looking at increasing it. I'd have to go back to my numbers and read that again, where it's coming in on that. So, again, not much else going on. Headline news, of course, they're talking a little bit about the Omicron variant. There's some concerns that there could be some type of Omicron storm, but again, personally feeling, it seems like everything we're hearing that these things it's pretty mild. They're not even getting hospitalizations. So, if I'm not sure why there is so much concern over it. It doesn't seem, again, to be that big of a strain where it's going to, I mean, there are probably people get hurt from it, but the vast majority out there, for the most part, should be okay. So let's take a look here at mortgage rates, see what we're doing here with mortgage-backed securities. We're up currently about 16 basis points. As you saw, we were up higher. We did have a price improvement earlier today from where we started off. So this is enough to definitely have a price improvement, up 16 basis points. Most of the time when I was on here for the last hour or so, it's been up around 21 basis points. We're trying to approach the 25-day moving average. Didn't quite get there yet, but we'll wait and see. We'll see how the day unfolds. But right now, we're up 16 basis points. Translate a little bit better pricing from Friday's close. And here's the volatility. As you see here, we climbed up here, and then since we've been kind of coming back down a little bit. We'll have to wait and see if we can get another spike or not later in the day. So let's fix that. And then we got Treasuries. And then Treasuries again started off up here. Now have since then moved down below its 100-day moving average. And right now we're seeing just under 1.43 at 1.42 right now, as you can see, which is good news for us because that helps put less pressure on mortgage-backed securities. Therefore, it helps with our pricing get a little bit better. Now, of course, tomorrow could be a different day once we start the FOMC, or even Wednesday. We will have a lot of volatility because we really don't know which direction they may go and how much the pace will come in and when they will start doing the rate hikes. So all those will be big factors this week. And then, but today, however, with the stocks down, a lot of that money is just going into bonds as a flight to safety. So we're just getting the benefiting from the downturn of stocks today. All right, folks, that's pretty much the wrap. We'll also take a look here at the national average for conforming loan limit rates. 15 years at 2.54, and then the 30-year fix is at 3.2%. So these are conforming limits, average rates with conforming limits, and they do have points built in there. If you're not aware, no rate fits all. There's a lot of variables that go into it, and it's not just one variable supersedes another one. They all kind of are joined together, and that's how we get. So that for the most part, that's why people, when you talk to other people, why you may not get exactly the same rate as the other person, and vice versa, because it could be, the type, could be the amount of down payment or equity, depending if they're refinance or purchasing that person has in there, their FICO scores, to variables like if it's a primary residence versus investment property, to if it's a single family versus a condo townhouse or a multi-unit property. So there's a lot of factors that go into it, and again, they look at all of them together, not just bits and pieces of it. So just because you may have a really great FICO, but you may not have the equity in there, so your rate may not be as good as somebody with a okay FICO, but a lot of equity in the property. So okay. Again, you guys got questions, please reach out. We're here to help you guys. We'd love to be able to talk to you guys, communicate with you guys, and we'll look forward to see you guys in tomorrow's video. If you like these videos, please help us out and smash that like button. We greatly appreciate you helping us out. You guys have a great rest of your day. I look forward to seeing you in tomorrow's video. Bye-bye.